Hey everyone. Accounting is like keeping track of your money. It's like a diary for all your money. It tells you how much money you have, where it came from, and where it went. This helps you make smart choices about your money. Businesses use accounting to track their money too. Every time they earn or spend money, they write it down. This creates a record of their money activities. This record helps them understand their money situation. Accounting is important for everyone, not just businesses. It helps you stay organized and in control of your money. Whether you're running a business in Mumbai or managing your pocket money in Lucknow, understanding accounting basics is super important. The accounting equation is a simple formula. It shows how a company's money is connected. It's like this. Assets equals liabilities plus equity. Assets are things a company owns, like a car or a building. Liabilities are what a company owes to others, like a loan. Equity is the owner's share of the company. Imagine a company in Delhi buys a car for 5 lakh rupees. The car is an asset. If they borrowed 3 lakh rupees for the car, that's a liability. The other 2 lakh rupees, the owner's money, is the equity. This equation helps us see how every money activity affects a company's money situation. Double-entry bookkeeping means writing down every money activity twice, once as a debit and once as a credit. This makes sure the accounting equation stays balanced. Imagine a shop in Bangalore buys 1,000 rupees worth of goods. This increases their assets, the goods, and also increases what they owe. Accounts payable are liability. This system helps avoid mistakes and gives a clear picture of the company's money health. The income statement shows how much profit a company made. It's simple. Revenues minus expenses equals net income. Revenues is the money earned from selling things. Expenses are the costs of running the business. Think of it like a report card for a business in Hyderabad. It tells us if the company is making money or not. The balance sheet shows a company's finances at a specific time. It lists the assets, liabilities, and equity. It's like a photograph of the company's money at one moment. It tells us what the company owns, owes, and how much the owners have invested.